What we'll cover. Welcome to our tutorial on analyzing stocks like a professional. If you're new to investing, you might wonder how some people seem to consistently pick winning stocks. Today, we'll break down the process into manageable steps so you can start making informed decisions. We'll cover the essential concepts and techniques used by professionals to evaluate stocks. Understanding the basics. To analyze stocks effectively, you first need to understand what stocks are and how they work. A stock represents ownership in a company, giving you a claim on its assets and profits. Think of it like owning a small piece of a business. When you buy a stock, you're essentially buying a tiny share of that company's value. Key financial metrics. Let's discuss some essential financial metrics that professionals use to evaluate stocks. These include price-to-earnings ratio. This measures the stock's price relative to its earnings per share. A higher P/E ratio might indicate overvaluation. Dividend yield. This is the ratio of the annual dividend payment to the stock's current price. A higher yield can attract income-seeking investors. Return on equity. This shows the company's profitability relative to shareholder equity. A higher ROE can be a good sign. Analyzing a company's financial health. To analyze a company's financial health, we look at its income statement, balance sheet, and cash flow statement. These documents provide insights into revenue, expenses, assets, liabilities, and cash flow. For example, a company with increasing revenue but decreasing profit margins might need to improve operational efficiency. Evaluating growth potential. Growth potential is another crucial factor in stock analysis. We examine the company's industry trends, competition, and market share. For instance, a company with a strong brand and expanding market share might be a good investment candidate. Putting it all together. Now that we've covered the essential concepts and metrics, let's apply them to a hypothetical example. Suppose we're evaluating a company with a high P/E ratio, a stable dividend yield, and a strong ROE. We'd need to balance these factors with the company's growth potential, industry trends, and competitive landscape. Conclusion and next steps. In conclusion, analyzing stocks like a professional involves understanding the basics, evaluating financial metrics, analyzing a company's financial health, and considering growth potential. By applying these concepts, you'll be better equipped to make informed investment decisions. Call to action. Thanks for watching. If you found this tutorial helpful, be sure to subscribe to our channel for more educational content. We'd also appreciate your feedback in the comments section. Happy learning!